Hey guys, so today's the 20th of March. It's currently 9:05 a.m. Western Australian time. Just having my morning coffee and having a look at my stock and option positions. If you watched yesterday's video, you would know that a lot of my options expire today, which is good news for me because what that means is I have no further obligation to sold puts and sold calls where I don't have to deliver stock or purchase stock. They've all expired worthless. And as the seller of options, rather than the buyer of options, that means I get to keep the premium, the money that I took in, and just move on. Today's another day. I get to write more options, collect more cash. Yay. So, having a look at some of my stocks. Now, this one here in particular I am looking at is IEL. Now, I've got 500 of these shares. There's 100 here, and there's another 400 reserved, which means I have a total of 500 of them. Now, I'm sitting on a fair loss on these of about $3,000. Obviously, if I bought 500 of them at about $16, they're currently trading for about $10 per share. So 500 times 16 is about $8,000. Their current market value is about $5,000. Which means 8,000 minus 5, I'm sitting on about a $3,000 loss. Now, on the surface, that seems like a fairly scary proposition. I'm literally down another $120 on these shares today. Yeah, it would be a scary proposition if your only intention were to buy these shares and you paid $16 for them, and today they're worth $10, and if you bought them because you wanted to buy them and sell them, well, you're losing money. I'm losing money. $3,000. But I'm not an emotional trader. You can't afford to be. And I don't think if this is any different than buying a house that you want to live in. I mean, most of us don't go and spend $800,000 or $900,000 on a house and check the house value every day. We don't care. If we spent 900 grand on a house and, the market sort of fluctuated and today it's only worth 850 grand, you're not thinking, oh my goodness, I've taken a 50 grand hit on my house. Well, no, because you're living in the house and you're not selling it. And you're not checking the prices every day. Well, stocks are slightly different because, we do tend to check the prices a lot, but I'm not selling IEL shares today. I bought them when they were $16 because I thought at the time that was a good price to pay for them, or else I wouldn't have bought them. I'm still holding them today and they're only worth $10. So, if I were to sell them today, I'd be a mug because I'm going to take a $3,000 loss on them. So guess what? I'm not selling them today. It's as simple as that. But to the contrary, I see this as a great opportunity to buy more because I can dollar cost average. Meaning, if I bought 500 of them at $16 and then I was able to buy another 500 for $10, then my average price would be halfway between 10 and 16. Which is $13. So rather than saying, oh my goodness, I bought a heap of these shares for $16 each, I can literally now use this opportunity to dollar cost average to get them for $13 each. So I'm going to do a trade on IEL. I could just literally go to the market and say, wow, IEL is trading at $10 today, $10.07. It's literally down 2.61% from yesterday. Yay, I can buy some today for $10, and that's cheap. Well, yeah, it is. Let's have a look at the chart. So we can see this stock has had a fairly substantial sell-off from around September of last year when it was trading around the $16 mark, right down to $13 odd, and then it fell down here, down to about $9. And it's come up slightly since then. So, yes, I want to buy some more of these shares. Do I want to just go to the market right now and spend $10 and buy another 500 of them or so for $5,000? Not really. I'm going to sell some put options to take in some more money, which will also give somebody the right to sell their shares to me for a certain price. So I will be obligated to buy some if someone wants to take me up on the offer that I'm going to put on the table in a moment. But it gives me the opportunity to pull in some more cash in the process. So let's jump over to the derivatives. Now, given that it's the third Thursday of the month today, because today is the 20th of March, all of the March options have expired. So we are now looking at our earliest expiring options being the 17th of April. which is the third Thursday of next month, because options generally expire on the third Thursday of each month. So, IDP Education, which is IEL shares that I already own 500 of, I now want the opportunity to have another 500 of them sold to me at around this price, or even better than this price would be good too. So of course I'm looking at the put options because I want the opportunity for somebody to put their shares to me rather than to call away or buy my 500 shares that I already own. So selling call options gives somebody the right to buy shares from me, and I don't want to sell my shares. Put options gives somebody the right to put their shares to me. That's why I'm selling put options. So put options with an expiry of the 17th of April at around the current price or below of $10. I'm looking down here. There's the $10 and they are trading at 35 cents and 44 cents. The $10.01, which is the European option, which I prefer to trade because the European option gives somebody the right to put their shares to me only on the expiry date, whereas the American style option gives anybody the right to sell their shares to me any time between now and the expiry date. So that one there, I could get caught out with a nasty surprise. That's my opinion. This one here, the European style option, which ends in 1 cent, only can be exercised at expiry. So that's my personal preference. Now, just remember, usual quick disclaimer, I'm just a dude trading in a spare room in my house. I'm not some financial guru. I'm not a advisor. Nothing I'm doing here is financial advice. I'm just trading real time, using my own money, my own experience, taking into account my own objectives, my own financial risk tolerance. I know nothing about your risk tolerance, your financial objectives, your financial situation, your background, your experience. I am not going to give you advice. I'd be crazy to. I've never met you. So this is not financial advice. If you want financial advice, go and see a financial advisor. You want advice on what stocks to buy or sell, speak with a financial advisor, stockbroker, somebody licensed to give that information. I'm not licensed to, I'm not allowed to, and I don't want to. Okay, so with that off the table, $10.01 gives somebody the right to sell IEL to me on the Thursday the 17th of April for $10.01. For that, I am going to collect somewhere between 35 cents and 47 cents. Somebody right now is saying, I will give you 35 cents right now, whereas somebody else is saying, no, 35 cents isn't enough. You need to pay me 47. So it's a bid and ask. This person wants 47. This person here wants to only pay 35. So I need to put a offer on the table somewhere close to this to entice him to come up and say, okay, you only want to pay 35 cents. You won't pay 47, obviously, but would you pay 38? Would you pay 40? Whatever. So that's what I'm about to do here. So I click on the option. It confirms that it's the $10.01 put option expiring 17th of April 2025. Yes, I confirm that it is a European style option. Yes, that means it can only be exercised at expiry, which is my personal preference on this one. Not always, but in this case, yes. So I am going to sell some of these options. I'm not buying them. The buyer is the person who has the right to put their shares to somebody. I want to sell that right to somebody. So I'm selling options. So I'm going to sell these. Now, how many do I want to sell? Well, as you know, I already have 500 IEL shares. So I might buy or give someone the right to sell to me another 500. And because the contract size is 100, I'm not selling 500. I'm selling 5 contracts because the contract size is for 100. Therefore, 5 contracts is 500 shares. I want to sell 5 contracts. So far, that's going to cost me $35 because I'm just paying the brokerage and the ETO contract fee. How much am I going to sell these option contracts for? As I said, the bid is 36, the ask is 48. So if I was to put an offer directly in the middle, the average of 36 and 48 is 42. I'll put 42 cents and see what comes of that. It's more than 36 and it's less than 48. Whether I get the offer taken or not, is another thing. But if I do, that obligates me to buy 500 IEL shares for $10.01 each. So that's an obligation of about $5,000. But if this offer is accepted and the options are taken, I'm going to be paid right now $210, which is 5 times 0.42 cents. 42 times 5 is 21 or $210. Less brokerage and commission of about $35, and ETO, exchange traded option contract fees of 71.5 cents, is going to put $175 in my pocket. Yay. So, let's do it. Hit the proceed button. Oops. Rookie mistake. Missing information. I didn't say whether I'm opening or closing the trade. Obviously, I'm opening the trade. I don't already have a trade that I am trying to close. This is a brand new trade. I am going to sell to open. I'm selling options to open a new trade. Hit proceed. Okay. Just gives me the confirmation. Are you sure you want to do this? Blah, blah, blah. Yes, I am. Punch in my password. Hit submit. Okay. Again, it needs a confirmation. Do you realize that you're selling a European style option? Yes. Confirm that the options trading is consistent with your objectives and your financial needs and situation. Yes. Order may result in a short exposure. Oh, damn, I'm going to be exposed. You may be called upon to provide proof of additional collateral, blah, blah, blah. Yes. Okay, so my order has been submitted. I click on manage my orders and I can see that that order is now in the market, which means it wasn't automatically and instantly accepted. Sometimes they are, sometimes they're not. This one hasn't been yet, so I'll give it a moment and we'll come back to it shortly. It's currently 9:27. You can see the order went through at 9:26 or 12:26 Eastern Standard Time. I'm in Western Australia, so obviously it's 9:26 here. Now, if you watched my video yesterday, you would know that sometimes I'm happy to sit here and wait until my order is filled, meaning I've put in a limit order to say you must pay me 42 cents per contract. But occasionally I'll be like, you know what, I'll change my order just like you would in any negotiation. If you're buying something, you know, the guy's asking $1,000 for it, you go and offer him 700 or 800. He's like, no, I really want 1,000, but I'll come down to 900. You'll be like, yeah, okay, I'll come up to 800, you know, and you get the thing for 850. Or he may hold out on his $1,000. You may hold out on your $700 offer. And no transaction takes place because neither of you can agree on a price. Well, that's exactly what's going on here. So I could either sit here and just wait until I get my 42 cents, which I may or may not get, or I could obviously drop my price down a little bit. I'm just going to refresh this. Okay, and I can see it's still in the market, so nothing's happening. For the sake of the video, because I want to move on with this, I'm going to amend my order. Now, this bid's now come down to 35.5 cents. Okay, that's interesting. I'm going to drop from 42 down to 40, which takes my $175 or so down to about 165. So by going from 42 cents to 40 cents, I'm taking $10 less. It's not the end of the world. I think I'll survive. So let's hit proceed with the amended order at 40 cents per contract. Still 5 of them. Punch in my password. Yes, I'm still aware of all this. Manage orders. Okay, this one is also in the market, which means it wasn't automatically accepted at that price. I've just hit refresh. It's gone through. So I managed to get 40 cents. Didn't get the 42, but I got the 40. Yay. So got to remember, this is still real money. $165. Cha-ching! $165 has just been added to my account. What I've done here is I've looked at my shares and I said, okay, I've got 500 of these IEL shares. They cost me $16 per share. They're currently trading at $10 per share, which means I'm down about $3,000. But I saw the opportunity to buy some more of them because now I'm dollar cost averaging. Instead of paying $16 per share, if I buy another 500 of them at $10, then my average price is only about $13, not $16. It's not 10, but it's halfway. But I haven't actually bought any extra shares yet. I've just given someone the right to sell me some extra shares. at $10. And while I'm sitting there waiting for that to happen, I've just been paid $165. Nice. That's real cash in my pocket today to do with as I please while I wait for the opportunity for somebody to come and sell me some IEL shares, 500 of them, for $10 each, which I can add to my portfolio to reduce my total cost holding. Well, it won't reduce it, it'll increase it because I've now got 1,000 of them instead of 500. So it's not reducing it, but it's reducing my average cost per share because I'm dollar cost averaging. Here's my notification from CommSec that they just sent me at 9:34, 2 minutes ago. It's 9:36 right now. Notification, we have sold for you 5 contracts of the $10.01 put option expiring 17th of April 2025 on my account. Today's date, the 20th of March, we have sold 5 contracts for 40 cents each, which is what I wanted. I wanted 42, but I came down to 40, for a total of $200, less brokerage and commission of $35.67. Net proceeds, $164.33. Oops, not quite 165, it's 164 and 33 cents. GST, $3.25, blah, blah, blah. So, quick trade there. I managed to pocket another $165 while at the same time reducing the cost of a trade that I originally paid $16 for, that I'm sitting on a bit of a loss on. I see it as an opportunity to buy more shares to dollar cost average, which then gives me more shares when the dividends come around, which is also a plus for me. Get this money today while I'm sitting there waiting for all that to happen, which may not happen, by the way, which is also good news to me because if they don't drop down to $10 or trade around $10 or below in the next 4 weeks, well, nobody's going to sell them to me for $10 if they've gone up. And if they've gone up, then I've also reduced my loss because I'm not sitting on a $3,000 loss. If the shares go above $10, the loss reduces, obviously. And by the way, when I look at the dividends, they went ex-div on the 5th of the 3rd, so that was a couple of weeks ago. The dividend was 9 cents, so I would have received a 9-cent dividend for my 500 shares as well, which is another 5 9s 45, another $45. Obviously, if I already owned 1,000 of them, I would have got $90. So it all adds up. So hopefully you've enjoyed this video, you've got something out of it. As usual, hit subscribe if you're not already a subscriber. Like and comment on this video to let me know you've got something from it. And I'll see you in the next one.